All right. So welcome everybody to our September 1st Friday. And for months where we have a holiday, we always do the first Friday the week after the holiday. So the first reasonable Friday is what I call it. If you don't know me, I'm Bert Jackson. I'm the CEO of the Cape Cod Technology Council. I'd like to welcome you all here today. We've also got the president of the board, Jennifer Reed, is here today from Bridgewater State University. Thank you, Jennifer, for being here. And just welcome to everybody. It's great to have you all here. Before we get started, just wanted to, first of all, thank OpenCape, who is our First Friday series sponsor. We appreciate their support in helping us put these events on, whether they're in person or virtual, as we've been doing since May of this year. And just to give you an idea of some upcoming things, since the pandemic started, we've been also doing something on our off Fridays, when we don't have a First Friday, called Coffee Q&A. It's a little bit later. It's at 10 a.m. on Fridays. It's more of a casual conversation with people from our business and technology community here. So next week, Friday, we've got Amy Dowd. Amy's here today, and Amy's going to be talking about email marketing. The following Friday is going to be Bob Cody. And he's going to be talking about Leadership Cape Cod, which used to be called CLI. I know some of you have been through the CLI program. It's a great program. He's going to be talking about that. And then our October 1st Friday, we've got a great speaker, Bob Familiar from Microsoft, talking about digital transformation. He runs their technology labs up in Boston. So that should be a great event. Now, we also have our infrastructure committee coming up, and that is going to be on the third Wednesday. And so this month it's a little early. That's going to be next week on the 16th. And the infrastructure committee is where we talk about technology policy in the region. If somebody has an issue that they want to bring up and have support from the Tech Council, or see how we can leverage some ideas for promoting technology in the region, that's the place to come and talk about it. We talk about broadband. We've been talking about the electric grid, bridges, all sorts of fun things. So feel free to come to that. That's an open meeting. There's no charge to attend that, and you can register on our website. So why don't we get started here? I also want to introduce Robin Orbison, who's going to be helping me moderate our discussion today. Robin's from Cape Space, and she's got that wonderful Tech Council background there. I need to do that. Very excited today to have Chris Richards from Cape Cod 5. Chris was originally scheduled for April, and that was the first month when we were figuring out what was happening. So we actually didn't have a first Friday in April. So glad that we can have Chris here. And it might be fortuitous, because I think that with all that's happened over the last 6 months, we've seen how money's changing hands and how payments are happening has changed a lot. I know even when I go to the farmer's market now, they're using Venmo, which I'm really surprised some of the people who are using Venmo. I didn't think they were going to be capable, but there you go. So Chris is an executive vice president and the chief banking services officer at Cape Cod 5. He leads Cape Cod 5's retail banking and operations, treasury management, the customer service center, and he is the executive overseeing the bank's 10 regional leadership teams. He's a nationally recognized expert on the subject of payment technologies, serving on multiple related boards and advisory committees. So with all that, I would like to welcome Chris.
Thanks very much, Bert. Good morning, everyone. I saw a few familiar faces pop up on the screen, so nice to see you, albeit virtually, and nice to meet everyone who I haven't met in the past. So yeah, excited to be here. It's been a long time coming. And as we were saying earlier, COVID slowed a lot down and also sped a lot up, and notwithstanding the payment space. So looking forward to this, I just want to make sure that this is valuable to you. So I know that people are monitoring the chat channel. So please feel free to ask any questions. If I'm too high level, please let me know. If anyone wants me to clarify, or sometimes, and I'll get into this in a moment, a little bit more context about this, but there's a whole lot to payments, a whole lot more than I think many people realize. So if I get too far into the weeds, please let me know that as well. One thing I am not is a technology expert, so I'm going to share my screen right now. Oh, can you see my screen?
Yes.
I can, yes.
Yep, looks great.
Is it? Okay, perfect. I'm seeing something else here. Okay, so, and if you see me looking around, it's because I have notes and then I'm following on the slides as well. So Bert gave me an introduction already, so thank you very much, Bert. And just at the bottom there, the different initiatives I'm involved with. Actually, payments is a very small world in the United States in terms of the number of people who are really involved in it. I had the really good fortune about 5 years ago to start getting involved at a much deeper level. Many of you may know our president, CEO, Dorothy Savarese, was chair of the American Bankers Association a few years back. And when she was working across the country, you know, it came to her attention that payments is a very important initiative throughout the United States. And there's a lot of, and as you know, with everything you see in payments all the time, there's a lot going on in the industry, and there's a lot of opportunities for banks to be disintermediated. And it's really one of the top priorities that banks, credit unions, and other financial institutions around the country really need to pay attention to, is what their payment strategy is. So with that, given some of my other background that I had here at the bank as well as in the past, I started to get more involved and became involved in these organizations. The last one there you'll see is Jack Henry Payment Solutions Advisory Board. So just to make everybody aware what that is, there's different core processors for banks around the United States, FIS, Fiserv, both of whom have bought large payments companies, and they're almost actually transforming into payments companies, not just solely bank processing systems or operating bank processing systems. And there's also Jack Henry. We use Jack Henry as our core processing system for all of our back office work that we do in terms of our online accounts and so on and so forth. Okay, so moving on. I think it's important, I know we want to talk about what's going on and what's cutting edge, but I think it's important to understand, to give context about the existing payment rails and what the current environment is. And you know, there are pain points as well as attributes associated with each rail. And that makes payments in the United States, payments channels or rails, and that's what the typical terminology is. We call it a rail. They don't really go away. And we'll talk about that in just a moment. There are risks in each rail. Just before the meeting started, Robin was talking about, you know, fraud. You know, fraud is a huge problem. And primarily fraud is perpetrated through rails. So we see fraud on a regular basis at the bank. I think we probably see a lot less fraud, knock on wood, than many other banks in other areas of the country because we have a very strong fraud monitoring area. But that person, the elderly person that gets a call of someone impersonating a grandchild to say, oh, I'm in jail, I need you to wire $20,000 to Mexico, and they do it. That is perpetrated through the payment system because the money gets wired. There's also settlement risk related to various payment channels that it takes a couple days for a payment to settle, and the payment might not actually settle, but I have the good of service that that someone paid me for, and then the money isn't there, and then the person who provided that good of service is defrauded. So that's another important thing to keep in mind. Much of the financial fraud we see in the United States is perpetrated through payment channels. There's also cash fraud, where we see people stuffing money into a FedEx box and sending it because they're trying to help their grandchild. So cash isn't really considered a payment rail. So checks, just very quickly, they've been around, probably the oldest aside from the cash in terms of a payment modality, but in terms of a rail, checks are the oldest. They were established back in Renaissance Italy and Florence. Obviously, we all know they're slow, they're expensive. There are different studies out there that looks at, from a business perspective, how much it costs to write and send a check. And it ranges anywhere from about $5 to $12 a check. We don't think about it that way when we're writing checks, particularly from a business, but when you factor in everything that's involved, it gets quite expensive. Checks were revolutionized, and it's actually apropos, today is 9/11, obviously. The check rail was revolutionized as a result of 9/11 because after the attacks, planes sat on tarmacs across the country loaded with checks. Up until up until about 2003, most checks were still delivered by aircraft. And so it would go from, say, I got a check from someone in California. I deposited it in my bank. It would get to Boston, would fly to San Francisco, it would clear. And that's why there was that float that we used to see. Because of 9/11, because the check system basically froze up, the federal government introduced Check 21. So primarily, the vast majority of checks are now converted to electronic payments by the Federal Reserve and delivered much more efficient and delivered electronically, much more efficient. You see that float isn't there anymore. Like you used to have, oh, I'll write this check, I know it's not going to clear for a few days. Well, you can't depend on that anymore. There are a lot of schemes related to checks. Robin was mentioning before the call that she was talking to someone where write a check, it would be converted to an electronic payment. There are different schemes out there related to that. They're legitimate, but there is fraud associated with them because the fraudsters are always looking for new ways to perpetrate fraud. And believe me, they are really tricky, and they're always evolving and trying to stay one step ahead of all of us, whether you're a business owner, a consumer, or a financial institution, or the government. And there are financial crimes units in larger cities around the country just dedicated to this kind of payments fraud, essentially, is what it comes down to. The challenge with checks is that, and as Robin said, we're virtually the only country that still uses checks. Checks are still very prevalent in the United States. They've really declined in usage amongst consumers, but businesses are very stubborn. There are still the primary modality of payment in businesses, I believe it's still over 50%, is via check. And the reason for that, there's a couple of reasons. Businesses are used to, and this isn't just small businesses, this is larger businesses as well. They're used to it. The corporate ERP systems, which are the large accounting systems, have not really evolved to the point where they've made it easy for businesses to adapt into more efficient payments technologies. And frankly, a lot of businesses just don't want to adapt. It's too much of a lift for them to convert over from check into another payment rail. And then finally, the real value with checks is the remittance information. So if you think about it, when I send a check to a business, likely it's going to have my name, my address, it's going to have how much the payment is, and it's going to have my account number. So for many businesses, they can reconcile their accounts receivables to the checks pretty easily. So that's kind of the background on the check. And again, please, I'm going quickly here, but we have a lot to cover, and I know we have limited time. But please feel free to, I guess chat is the best way, or Robin or Bert, unless you have other suggestions. Next, we go into wire. The wire system is also fairly old, actually one of the oldest payment systems in the United States, established in the World War I era by the Federal Reserve. Wires, you're probably very familiar with these. They really have limited use cases. They're really meant for high value transactions. You think about a real estate closing. We do a ton of wires for attorneys' offices where we're paying off a bank. It is inefficient. It can be slow because you actually have to validate that the person sending the wire is actually the person. And there's two different ways typically we see wires sent. Either someone coming into our branch because I need to wire money I'm purchasing a car, let's say. And so the recipient on the other end wants to know that it's irrevocable. So one of the attributes of the wire system is once I send that money, it's gone. When that grandmother sends the money to the third party, ostensibly the grandson, that money is gone. What happens is, from a fraud perspective, the fraudsters take the money out, and they actually are not even taking the money out. There are money mules, intermediaries, they get paid a portion, and what they do is they take it out of that account at whatever bank, in whatever state or location, they take it, they put it into another account, and that's where the end perpetrators or fraudsters, if you will, are taking that money out and they're laundering it through the system. The FBI has actually made a few modifications over the last few years to the wire system. So there is opportunity in fraud-related situations where we can, what we call, claw back that money, but it is very difficult. From a business perspective, we see a lot of attempted fraud, and we see actual fraud perpetrated through business email compromise, or through where they're doing phishing schemes where they're saying to the CEO, hey, this is, you know, Bob, the CFO, I need you to prove this wire. Oh, this is a legitimate email coming from Bob. I'm going to go on to the system and authorize that wire to go out. We read about this on a regular basis. It's not uncommon. So you have the two different channels where, again, the grandmother comes into the branch. I want to send money. We need to make sure it's a grandmother, but we also have to try to do our best in terms of due diligence to ask questions to make sure that the other person on the other end is legitimate, is the grandson. And then with businesses, typically we see them using online banking. And so we have a very robust verification system here at Cape Cod 5 to make sure that the person who says they're sending the wire is in fact them, that this is not a business email compromise or a phishing scheme that is being perpetrated. You know, and we read in the past couple of years, there was a relatively large wire fraud scheme perpetrated with the college, community college. It's all public, so that's why I'm saying, and I think most people are aware, it was in the Cape Cod Times. And that's because fraudsters were allowed to get into their bank's online wire system through the college because of they didn't have systems as up to date as it maybe could have been. But again, that's not uncommon. And that's one of the things we work hard with our business customers on, is to make sure that you have very robust controls and systems in place. So if you're using the online banking system, that for any bank, that it's protected, or credit union for that matter. And make sure you have fraud monitoring in place with those systems, because those fraudsters are staying one step ahead, and they are figuring out ways to perpetrate in any way they can. You know, one of the questions when we try to convince customers to move over to electronic payments, they'll say, oh no, I'm going to stay with check because check is so much safer. Check is not safer. Electronic is much safer. And what I tell people is, I used to be in commercial lending at one time, and I remember a customer, and he said, oh no, I'm safe. I open my statements once a month, and you know, I only write checks. And I said, oh great, because guess what? You write me a check, I can go down to Staples. I have your routing number. Again, I have all that remittance information. I have your name, address. I have your routing number for your bank, and I have your account number. And I can create a check at Staples, or I can create a check online through one of the online providers. It's not safe. And we see it really not as much recently, but it was much more prevalent about a year ago with check fraud. So keep that in mind, people. The fraudsters get checks out of the mailboxes, they wash the checks, and they change the payees as well, and then they negotiate those checks. So again, when you're thinking about checks as being a safe alternative, I'm not going to go to electronic because there's so much risk. Electronic is a much safer. In your modality, in terms of paying your vendors as well as your employees. And if your bank, you want to make sure that your bank has those safeguards in place, like callbacks and other verifications, using out-of-band authentication, as well as tokens for login, is really important. You know, and don't think that it's something that's difficult for you. I don't want to go through this hassle. It's a lot more hassle if you get if there's fraud perpetrated against your account. I can tell you, you know, we see it. Luckily, again, we have been very fortunate here with the protocols we have in place, but we see it other places, and it's not fun. And even when fraudsters get through into your computer system, which also can happen, and we do have customers that happens to, it's not a fun experience. You're better off taking the time to have good hygiene regarding payments. Okay, moving on. The other thing with wire, I'll just say it's near real time. So when you send that wire, again, it's irrevocable, it's gone. The person on the other end is getting it in a matter of seconds, and it gets going into their account pretty quickly. Next, I'll move on to ACH, the Automated Clearinghouse. This is the most recent payment rail that was created in the United States back in the early 1970s. It was really for the federal government for payroll. I believe it was in the Air Force. And we think of ACH as one of the most common uses is direct deposit. Many of us get our payments, our payroll through direct deposit. In fact, this week, and we're promoting this, is National Payroll Week. It's actually quite surprising the number of employees on Cape Cod that's still in our region and as a whole that receive payments by check. Very inefficient for both you as the business owner. It's inefficient for them because they need to go to the bank. It's not as safe, obviously, because people have your credentials. People can lose that check. And so it's much better for all of us for people to be on direct deposit. But ACH has many other use cases. And there's been thousands that have been developed over the last several decades related to ACH. You think about bill pay when you go to pay your bill at the bank, that is going over the ACH rail primarily. And we'll talk a little bit more about ACH in a moment. It is a batch system. So ACH is actually, they're all batching out for certain times during the day from a bank. So we're sending ACHs from Cape Cod 5 to other financial institutions. They're all going in a batch system. So there is a delay in ACH. And that's why many times when you see a payment coming through, the sender will send it, batch it out on Friday, but you might not get it until Monday. And that's typically over the ACH rail. There is some messaging with ACH, but it's not as robust as like with checks, for instance. And we'll get more into ACH, as I said, in a moment. Cards established primarily in the United States in the 1950s with the Diners Club card. Cards feel near real time. I go to make a payment at, I go to Trader Joe's. I go to make a payment. I'm going to see that in my account right away. It's going to what we call memo post. It's not truly real time because, again, there is a batch on the back end. And many of you as merchants know that when that consumer is paying me with their card, I'm not seeing that money for a day, maybe 2 or 3 days. American Express was always known for being very slow. They've sped up in the last couple of years because they knew they were using that float. They knew they had to do that because businesses were just moving to Visa, MasterCard, and other card providers because of that slowness. And it became a cash flow issue, obviously. And American Express was always more expensive as well than Visa or MasterCard. But there's also, it's expensive. You as a merchant pay interchange fees. Obviously on the front end, you know, as rewards have become very popular and you're paying interchange fees based on the kind of card that the consumer is using. And so it can cost you a lot of money on an annual basis when you aggregate it. There's also, that's a credit card network. There's also the debit card networks. And I should say credit card networks because you have Visa, MasterCard, Amex, Discover, so on and so forth. But on the debit card side, there are several different networks like the NICE network. You've probably heard of some of these, Star, Shazam, and each of them actually have different things that set them apart. We at Cape Cod 5 use the NICE network. It's pretty prevalent in the New England area. And typically these networks really dominate in specific regions around the country. But debit cards are a much less expensive rail to go over. As you probably know from a merchant, they cost much less. And with the Dodd-Frank Act that was implemented in 2010, many of those debit card fees were reduced based on different attributes of the financial institution and how customers wanted and merchants wanted those transactions run. There is a lot of bad blood in the United States with the cards, between the card networks and the merchant groups, such as there's a group called Merchant Advisory Group, MAG. It's dominated by the large retailers. Anybody can join, but as well as not just retailers, but you've got Target, you've got Walmart, you have Facebook, you have Apple, because they're trying to disintermediate the cards. They spend a tremendous amount of money every year on interchange fees, as you can imagine, with the volume that they're putting through the card networks. And so we're going to talk about a bit about this in a moment, but sometimes there are turf wars. If you remember about a year ago, Kroger was in the news because they stopped taking Visa because they said, we're not going to pay you your interchange fee anymore. It's too high. And there's a lot of lobbying that goes on Capitol Hill related to interchange fees. And when we get into the modernization of the payment system in a moment, that's what we'll talk about. But these are our legacy, really our legacy. And I know I've spent a little bit of time on this, but I think it's important for people to understand this, because essentially what happens is that most of the payments, we see different things like Venmo, for instance, as a payment. Venmo is either running over a card rail, which is more expensive, or the ACH network, ACH rail, if you will. And that's why sometimes if I'm cashing out Venmo, you can pay a little bit more money to get instant credit, but otherwise it's going to go, if you don't pay that money, it's going to go over the ACH network primarily. And so what happens is that's going to take a couple days to settle. So that's why it's about experience. And many times what we see as a consumer is the experience is really not what's going on in the background, because it's going over the ACH rail. It is a batch system, like I said, or it's costing me more money. Like I had one of my sons was trying to send money to someone via PayPal. It was going over the card rail, Visa, MasterCard, and it was going to be a pretty substantial fee, like a cash advance fee. Again, expensive on the card network rail. PayPal is going to pass that cost on to me. Now, if I just do PayPal out of my account, it's probably not going to cost, it doesn't cost me really anything at all, because it is ACH is a very low cost rail to use. So given all that, we haven't had a new payment system in the United States in the last 50 years. And there's a lot that's driving faster payments. And you can see that here. People are expecting and demanding faster payments. So as we all know, I think, particularly you and being part of the Technology Council, consumers are comparing, and I think a lot of this spills over into the business side. So that's why I'm kind of mixing and matching here. But you have an Amazon experience. I get pretty much instant gratification. If I go online to Amazon, I can go on and buy that book, and I know I'm going to get it in a day or two. You know, it's not the same, and I'm going to get an email to validate that, yep, we received your order and you're going to get it tomorrow, or even faster in some cases. And so people want that experience in their banking, financial life, but very much so from a payments perspective. They want to know that I'm sending this money to Robin right now, and she's going to get it right now, and it's not going to take her 2 days to get it. So they want to receive those transactions, and they want to pay instantly. They want to be able to split in restaurants, as you know, that I'm going to split it, and that's there today. It feels real time to the consumer. On the back end, it's not real time at this point. And businesses want this too, as well, because if they could get off the check system, and we're going to get into some of the use cases in a moment for businesses, but if they can get off that check system, it's much more efficient, it's better cash flow management, and it's less risk, because I know that when my customer paid me, I'm going to get the money right away. I don't have to wait for a check. I don't have to deposit the check at the bank. It may get denied for NSF, so on and so forth. There's a hold related to the check. Sorry about that. There's a hold related to check, a whole raft of issues with check. So that's part of what we're trying to accomplish in the United States at this point. And this is what's driving on this slide, a lot of what's going on in the United States. We obviously have electronic devices, both computers, but also mobile. Mobile payments have risen. There's been a great deal of rise in mobile payments. APIs, plugins that enable vendors and customers to be able to send these payments more quickly. The Internet of Things, which you're all aware of, as well as blockchain. You know, blockchain in the payments world still has a lot to live up to, but blockchain, as it continues to mature, will continue to transform the payments industry as well as other industries that I'm sure you're more aware of than I am, including we talked about wiring money for real estate closings, but blockchain has a lot of applicability within the real estate industry, from title searches and deeds and so on and so forth, which obviously has a spillover effect to the financial and banking industry. One of the things I did want to point out that I think it's important for people to be aware of are the different types of faster payments. And so you hear a lot of these different terms. There's P2P. I want to pay Robin because she just paid for our meals, so I'm going to reimburse her the $20 for lunch, my half. P2B, or it's also called C2B, and there's different terms, even nuances within this. You know, I want to be able to pay my Verizon wireless bill. So I'm a consumer. I want to pay Verizon wireless. There's B2B. So, you know, again, vendors, customers paying vendors. So I am ordering a supply of, I'm a home center, I'm getting windows from Anderson Windows. I need to be able to pay Anderson for that order quickly. And so many times I want to be able to get a discount. So I want to do that in an efficient manner. And then there's B2C or B2P in this case. As I said, this is Guardian Analytics. Again, if you look at the different consultancies and they have different terminology, it doesn't vary by a whole lot. But payroll is one example. Emergency payroll, insurance settlement. I get in a car accident. Insurance industry today. The adjusters are going the way of the dodo bird. Frankly, they're becoming extinct because I can take a picture of my damage. I'm going to upload it to my insurance carrier. They're going to review it. They're going to make a decision on that, and they're going to send me the money. Now today, it might come through the ACH rails. And so that might take a couple of days, but hey, I need that money as quickly as possible. I have no transportation. I didn't have car rental insurance rider on my policy. You know, I'm paying rent. I'm paying for a rental car. I need to get a car as quickly as possible. Well, with the new faster payments, we can get that money to you, or the insurance company get that money to you more quickly. There's a lot of different use cases. And as I said before, there's been thousands of use cases developed on the ACH rail. We expect thousands of use cases over the next few decades to be developed on the real-time payments rails. And insurance companies actually are using faster payments today. For instance, they're using Zelle. We'll talk a little bit about Zelle in a moment. They're using Zelle to pay their policyholders much more quickly so that that money is getting to them pretty much instantaneously once they've made a decision. There's another also kind of, sometimes you'll see called A to A, another modality, if you will, called A to A. And that's where I want to send money from my account at Cape Cod 5 to Eastern Bank, let's say. Not necessarily an easy process, typically going over the ACH rails. I want that money. I need that money in Eastern Bank for a reason. Sometimes today people have to wire that money to get it there very quickly. So I might have a real estate closing. I need my down payment, but it needs to come out of Eastern Bank for some reason. So that's another piece of this. And the other part that you'll hear a lot about too, which is a little different from any of this, is contactless payments. So contactless payments is something internationally that if you travel internationally at all, you're probably very familiar with this. The United States has been a slow adopter. There's been a couple of initiatives to start contactless, get contactless up and running. Contactless really took a turn about a year or so ago when Chase announced that they were, and they're the second largest credit card issuer in the United States. They were converting, they're in the process of converting all their cards to contactless. So I can go up to a terminal and tap my card. So it's called Tap to Pay as well. And I believe that's how Chase brands it. So you're seeing a lot of other financial institutions follow suit. You also have Apple Pay, Samsung Pay, other types of mobile pay that you're probably familiar with. A much better experience, in my opinion, than pulling out the card and dipping. You probably remember EMV was, well, it's still implemented in some cases. For instance, gas stations still are on schedule to convert next year. But EMV is much more secure, but it's a different consumer experience. It's also was very difficult for the merchants at the beginning from a consumer adoption, consumer education, as well as from the time. If you remember, you kind of sit there that awkward few seconds of the dip, waiting for that transaction process. Contactless is much faster. COVID has really created a hockey stick effect with contactless. And so we're seeing a much higher adoption rates. And in fact, it's really penetrating the United States with metros. So it's becoming Boston, the T, New York, Chicago. They're doing away with like the Charlie card schemes where you have to actually do contactless payment. So a lot of banks are starting to move very quickly towards contactless with their debit cards and credit cards, as well as offering Apple Pay and other modalities. So the industry is kind of getting this put upon us, and it's not a bad thing. I think it's actually a good thing because, again, it's a better consumer experience at the end of the day. So quickly, we're going to talk about these three quickly on this slide: real-time payments around the globe and common traits of real-time payments. Because at this point in the United States, we haven't talked about real-time payments at all. We talked about real-time payments feel in the United States. So real-time payments actually has been around for a long time. And in some countries, it's been around for decades. I believe Mexico has had real-time payments in place for many, many years, which is not something you think about. Some go back to the 1950s, actually. And it's in development in 45 different countries. And the United States does reflect here as being live. And we're going to talk about this in just a moment in terms of the RTP system. So we are live with a real-time payment channel or rail. It's just not ubiquitous at this point from, at least in our perspective. The challenge with the United States is what's happened in other parts. Let me start this way. Parts of the world, it's been a top-down approach where it's been government mandate where they say, we are going to implement a real-time payment scheme. That's what happened in the UK about 10 or 12 years ago. And we'll get to that in just a moment. The United States has taken, which we generally do, a more competitive market-based approach. And so what's happened is the market hasn't kept up with other parts of the world. And where we really had a best in globe, if you will, payments system back in the 1970s with ACH, we've really become laggards compared to the rest of the world. And we're viewed that way. It's very difficult to make cross-border payments still. You have to wire. There are other schemes like Ripple where money can be transferred electronically, but cross-border transactions, if you deal with any vendors overseas, for instance, you know that it's not easy, it's expensive. Data with wires, there's not a whole lot of data that travels over the wire system. So it's sometimes hard for reconciliation. So from accounts receivable perspective, oh, Bert's company paid me that money. I don't know where this wire actually came from. I know I have the money, I just don't know who sent it. So the UK is really the gold standard in real-time payments. Again, government mandate, it's become really the ubiquitous payment rail in that country. It actually, what they thought it would do is really disintermediate other payment rails, but it hasn't done that. It's actually grown the payments pie, if you will. The number of payments transactions in the UK has grown pretty substantially. And so they don't really use checks anymore in the UK anyway, but in terms of cash is still used for small dollar transactions. Wires, ACH is still used. But again, that's what we in the United States look to for a model. These are the common traits of real-time payments. We want it on all the time. So if I'm a business and I want to go sit down, I own a company, I want to pay my vendors on Sunday afternoon, I can do that. I know it's going to get there on that Sunday afternoon. It's always on. It's instant. I know it's going to get there again in an instant. It's irrevocable. So there's payment certainty. So me as a recipient of a real-time payment, I know when I get that payment, I don't have any credit risk. I don't have any settlement risk that check may be returned after I deposit it. With ACH, NACHA, the National Association of Automated Clearinghouse Association, has rules where ACH payments can be returned in certain circumstances. The rules are pretty tight, but I have that money. It's in my account. It's mine. I know I can use it. It's certain. I know that when that money's in my account, I can see that it's there. So it's not only can't be recalled, but I know it's I know it's there. I know who it came from because of ISO rules, which I'll talk about in a moment. And then delayed settlement. There is, in some cases, periodic net settlement between participants so that there is a little bit of a window to be able to do a recall, but it's very short. So again, I have that irrevocability attribute once I receive it. So these are some of and get into this in a moment, but this is an overview of some of the faster payments initiatives that are underway, and in some cases underway and other cases being stood up in the United States. So the Federal Reserve really led this. There was a faster payments task force that was set up about 8 years or so ago. They solicited Again, it was a market-based approach. It wasn't the Federal Reserve coming in and saying, this is what we're going to do. They wanted the industry to come back to them. 22 proposals were submitted. And what came out of that was a guide, which is available on the Federal. You can Google it. You can find the guide. It's pretty lengthy. And they developed this to guide the industry. And then there's continued to obviously work closely with the Federal Reserve, the ABA payment system committee that I'm on. We meet with the Fed twice a year in person in Washington, D.C., so they can hear what our pain points are and ways that things that they can take back that they can affect change with. And then what came out of ultimately the Federal Reserve Payments Task Force was the Faster Payments Council, which is a new group that was stood up about a year ago. And that's made up of merchants, it's made up of financial institutions and other stakeholders across the industry. You can join that. It is fairly inexpensive for a merchant to join the Faster Payments Council. We're actually in the process of joining right now at Cape Cod 5. So they really were the catalyst for real-time kind of being spurned in the or developed in the United States. This quickly you might enjoy this from a technology perspective, we have the application layer. Again, Venmo and Zelle and PayPal, that's the experience that the customer receives. So that's what they're seeing. That's a user experience, if you will. On the back end, there are FI participants. And always, whether it's Venmo or it's PayPal, they need banks underlying as part of this system, because FIs actually can't go out and get bank charters at this point. They would have to buy a bank, which in some case happens, but you need that FI, that financial institution participant. And then you have these technology partners, and there's many, many others like Fiserv, FIS, Jack Henry, JHA, which I mentioned, our provider. And then finally on the back end, there's settlement. Again, we talked about settlement risk and how long it takes to settle. In some cases, the Federal Reserve is the settlement conduit, if you will. Other times it's NACHA, other times it's RTP and their owner of the clearinghouse, NACHA on the ACH network. So NACHA, again, ACH developed 50 years ago. NACHA has seen the development of real-time payment systems. ACH is a batch settlement system, as I mentioned. So they've been doing a lot of work over the last few years to modernize the ACH system and develop additional use cases. You may have heard in the last couple of years, same-day ACH. So there is the option to send funds via same-day ACH. You'd have to go to your bank to say, hey, how do I take advantage of same-day ACH? And basically, because it's a batch system, if you get it in for a certain time, like if I get it in to my bank, that payment by 10 o'clock, it's going to be to the endpoint by 2 o'clock. It's not real time. There is still that window of settlement there in between. And as I said, Venmo rides on the ACH rail. Again, there are many, many different companies are using ACH. We don't see it that way as a consumer or think about it that way typically. The other thing with NACHA ACH is it's not high dollar. You can't really use this for wires because the cap, it went to 100, it started 25,000 for same day ACH. It's now at 100,000. So it's not really considered high value transactions. Many merchants are negotiating transactions that are much higher dollar volume. So these are really in the B2B space. These are typically the low dollar transactions that are being conducted via same day ACH. ACH, on the other hand, regular ACH, it's up to your bank to set what they're going to give you for a limit on ACH. So that could be $1 million for a transaction, and then there's daily limits as well. The debit card networks, they're working on a lot of same-day ACH, real-time schemes, or at least what feels to be real-time schemes. Right now, you probably heard of Venmo. That's the bank alternative to P2P. Venmo is actually not real-time. It appears real-time because the Venmo has connectivity into the banks that are on it. We're actually going on Venmo in the next couple months. But if a bank is not part of Venmo and money is being sent, it's either being sent over ACH or over the card network. And if it's over the card network, it's more expensive for the bank to have it go that way. But it's table stakes for us. We have to pay the fees. We don't charge our customers. Again, it feels real time to the consumer. And many small businesses are using P2P, what is really for C2B or applications. Like if I want to pay my plumber, I'll pay them via Zelle or Venmo. So it's much more convenient than writing the check. So again, it's not just for P2P. There's a lot of C2B that's being used as well. MasterCard, Send, Visa, they're trying to stay relevant. They're trying to preserve their interchange fee by coming out with different programs that can send money faster. Again, there's a whole lot here. This is how Zelle works. But basically, Zelle is a messaging system and a directory that is built on top of the ACH and card network primarily. Because even if two banks are members of Zelle, it's still going over the ACH network. So again, that real-time feel is because of the directory. Bert Jackson, we know your social token, it's called, or your cell phone number is attached to this account at Cape Cod 5. And so when Robin tries to send you money, it's looking at that directory, and directories are, anybody's interested, a big deal, but very much an enabler within the payments systems, and it can see or an email address as another type of social token. But again, it's not real time at this point. Venmo, you can see this again. You have either MasterCard or Visa, and you have that bank account sitting in between the sender and the receiver. And then ultimately, you can see here, it's settling over the ACH rail primarily. It could settle over the card network rail, but it's going to cost money to the consumer. So RTP is the first real-time payment system in the United States. It went live 2 years ago, November. Transaction between BNY Mellon and, I apologize, the recipient bank, I do not recall. But anyway, there are about 30 banks in the United States on this. RTP stands for real-time payments. The branding is RTP. It's owned by the Clearinghouse, which has been around since the 1850s, and they invested a lot of money into this. And many of the large financial institutions are on the RTP network. And so what that's resulted in is 65% of the demand deposit accounts or checking accounts in the United States have connectivity to the RTP network. Now that's really because the big financial institutions dominate deposits and number of accounts in the United States. And it gets lumpy from, you go to metropolitan areas, they're much more prevalent in terms of people using them than areas like ours. But banks are onboarding into the RTP network. Cape Cod 5 is actually scheduled at this point to go live on September 30th with RTP Receive. So at that point, if you are dealing with a customer who is on RTP and they bank at Bank of America, that customer could then send those funds to Cape Cod 5 via RTP. So you can take advantage of all the attributes of that system. And, many small banks say, well, why would I go on RTP? I was on a panel and banker from Oklahoma said, we have X number of $100 million banks in Oklahoma. Why would we care about this? And the answer was, was because, your customer may be buying product from AMD and they want to get paid. And the only way they're going to get paid is through RTP or real-time payments. And the lights kind of went off that, this is going to be table stakes. Many banks are saying, well, we're not going to join the RTP network, particularly the smaller banks. And we're doing a lot of work trying to evangelize the benefits of every bank. Because if banks in our marketplace, our competitors don't go on it, it's really, I think, a loss for the consumers in our marketplace, both on the business side as well as on the traditional consumer side. There is also the send capability that we will be getting later. So we will not, and many banks in the United States, even big ones, don't have send capability where you'll be able to say, hey, I want to send this money to Archer Daniels Midland because I need to pay for my agricultural supplies that I received. Or I want to pay Comcast because they're about to shut off my service and I need them to get that money right away. And then there's request for pay, and that's still under development. With the ACH network, and I know my time is running short, so I'm wrapping up here. But with the ACH network, right now, if I want to pay somebody, I want to pay Comcast, I know they're not going to get that money for a couple of days. I might be at my final notice, I'm going to get shut off. With RTP, I can get it to them right away. But with request for pay, and with the ACH network, if you're familiar, like you go to the gym, money's coming out of your account every month, excuse me. That's an ACH debit, right? And so there's risk related to that. The RTP network does not have a debit functionality. What it has is this request for pay. So I owe Comcast money this month, and my bill is due. They can send me a request. They will be able to send me a request for pay right into my banking online and mobile environment, and then I say, yes, I want to pay that payment. That's a legitimate payment. So it takes away that debit risk because there is fraud on the debit side of the ACH network that does occur. But then I'm also in control to say, I want that payment taken out today as a consumer from a cash flow issue. We know many people, many consumers live on the edge, the financial edge, and cash flow, day-to-day cash flow is an issue. So I don't have the money today because I need to pay rent, but I know I'm going to have it in 2 days. So I'm going to pay Comcast in 2 days versus that debit coming out of my account on the first of every month. There's a lot of use cases with RTP. So just think about this. Today, if most of us use Amazon, you can get a Chase Amazon card. They're going to give you 5% back in points. They're doing that because that is highly subsidized by interchange fees that they're getting back. Chase is getting back, and Amazon is getting back from the credit card networks because they are earning that interchange fee. But how else do I pay Amazon? Well, they'll let me put money into a card, but that money is into my account, that money is being uploaded into the ACH system. If I don't have money there, they're not going to send the money until they have it. And I would guess 95% plus of the transactions through Amazon I pay through the card. So you think about the money that they're spending in interchange. But with RTP, I go and order that book. And they say to me, oh, we just ordered this book. I get my email today. But instead, what I'll get is a message that will say, go to your online banking and authorize this payment. I just sent them the money immediately, irrevocably, payment certainty at very low cost. RTP, now banks can set fees for RTP. RTP is only charging banks about a nickel a transaction. So Amazon can then say, hey, you paid over the RTP network. We're going to give you a discount for that, similar to what they do with the card. But it's going to be at a much lower cost. Verizon, I've been in meetings with Verizon Wireless where they've made no bones about it. We will compensate our customers for using lower cost. You can go to Verizon Wireless today and say, I'm going to pay my bill by my debit card, much lower cost than a credit card, and get paperless statements. And I think they give you about $5 off per line. So that's $20, $25 per month in every household that they're subsidizing because you're not using the credit card. So you can kind of draw that out into many, many, many different use cases that will be developed. And then finally, just to wrap up here, FedNow. What happened was the Fed did this, the faster payments program. And then what they did is they went out to the industry just about a year ago and said, hey, we want to stand up our own real-time payment system. And of course, the clearinghouse and RTP said, well, wait a minute, we just spent millions and millions of dollars to do this. Why are you going to compete with us? Well, the Fed's moving forward with the real-time payment system. Frankly, a lot of the community banks will probably go on the FedNow system. I think for any bank or credit union that really wants to be serious about being in payments for their customers, whether they be business or consumers, they're going to have to be on both. Our plan is more likely than not, we're going to be both on FedNow and RTP. The real question, that's one of the real questions, and this system is not going to be available for another couple of years. So on the payments, that's in the way things are moving today, that's a long, long time. But the real question is interoperability. We don't have interoperability in really our payment systems today where the card system talks to the ACH network. But one of the attributes we're hoping will happen is interoperability. Otherwise, banks are going to have to go on both systems, again, if they're serious about providing payment services to their consumers. Otherwise, we're going to become dinosaurs. We're going to become disintermediated and frankly irrelevant. And banks and credit unions have a lot of work to do, particularly over the next 10 years, to stay relevant in many ways. But payments is probably one of the most prominent. And then finally, these are different resources that I want to make you aware of that you can go out to if you want more information. And of course, I'm happy to answer any questions you have, just going to me through LinkedIn, or you can find me on the bank's website, or certainly get my information from Bert or Robin. But probably the most applicable on this list are the regional payments associations. So every region around the country has a regional payment association. Ours is niche, the New England Automated Clearinghouse Association. They're based in Woburn. We're a member, and we can actually help get you associate membership. But they actually provide, and I've given advice to clients, business customers of ours, to join. It's not that expensive, but if you're processing a lot of payments, it helps you keep up to date with what's going on, particularly with ACH. There are a lot of rules where you can run afoul of ACH, not just for us as a bank, but also you as a merchant. And so you want to make sure you're doing things properly, but they can give you advice for checks. There's Reg CC, which is a federal regulation, Reg E, which governs electronic payments. When customers are looking for refunds from you, we're happy to help, and we do it all the time for customers, but give you advice on, we have to abide by federal regulations. But that's a third party, independent third party you can also go to for advice as well. So, and so you can just, actually, I apologize, we don't even have niche on here. The Center for Payments, which is an association of all the regional payment associations, but niche, NEACH, is an organization that it's like a few $100s a year to join. So that's another great resource. So with that, I'm wrapped up. I know I'm just over my time. I know I covered a lot. I hope it wasn't too much, but
Chris,
any feedback, questions?
Thank you so much. Just for everyone to know, if you're joining the annual meeting, we're going to start the annual meeting at 9:15, because I did want to give Chris time to get through some of this amazing stuff here. There are a couple questions, Chris.
Yep.
So, one question had to do with, as we have, excuse me, I'm frog in my throat here. As we have some of these new payment systems coming online, there was a question about it being disadvantageous to poor people, to people with less means. Is there anything that's going to be addressing that?
Yeah, I think that's a really good question, and it's especially relevant in the times that we're in. We talk about the tale of two COVIDs, and we're seeing a real split locally within our economy. You talk about people living on the edge, and one of the things that studies of FDIC studies, including FDIC studies that have been published, is that mobile payments and mobile banking actually expands access to the banking, the financial services industry, makes it easier for those who are underbanked and unbanked, and there's a lot of those people in the United States, gives them better access to the financial industry. So it's actually helpful for them to be able to have access to these different payment systems. The challenge still is in many cases, and it's not in all cases, is you have to have a bank account. And many people, such as immigrants, are very fearful of banks because of places where they came from. There's a distrust and fear of banks. And so the industry tries to do a lot to overcome that, make it so that it's low cost for them, like Zelle. We don't charge Venmo. We won't be charging, I should say. Venmo, there can be a charge in certain cases. But again, trying to get these people on these systems, because they're still going to check cashers where they're paying fees, including large national retailers. They're paying for international wires. They're going to Western Union and paying a lot of money. Of course, that's a whole different thing because it is cross-border. So there's a lot of opportunity for consumers of all types to save money in the way that they process payments, but certainly giving access to those that don't have historically had access to the financial system. So it's a good thing.
Chris, there was a question about retailers charging extra to use payment technologies, and if there's a legal precedent for that, or
yeah. So
I know when you're in New York, you see 5 cents off per gallon for cash, yeah. But you don't really see that here in Massachusetts.
No, and there's different laws from state to state, and there's some places that won't take cash. There's a big thing in Philadelphia because again, that to that last question, can disintermediate people. if you only take cards or some kind of electronic payment method. In terms of Massachusetts, you do see, and Visa, MasterCard were hard and fast that if you charge more to process, a merchant charge more to process, a retailer more to process a Visa, MasterCard payment, they could be, their privileges in the networks could be revoked. There was some changes with Dodd-Frank that came about where if it's under $10, they can say we're going to refuse it. You do see sometimes if it's $20, you'll see a sign posted. They can't do that. I believe that the ceiling is $10 on that. But you can. It is okay, and they can actually charge more now for credit cards. Traditionally, what it was is you could give a discount, and sometimes that's what you see. We'll give you a discount if you use, a check or another if you don't use cards, essentially.
Got it. So just a couple more questions around recommendations for payments. One is, if I'm a small business owner and I'm working with clients around the country, is there a payment system that you would recommend, for like a solo entrepreneur? And the other question is, for nonprofits who are collecting money on their websites, is there a system that is reasonable for them?
Yeah, those are both really good questions. First of all, if I was a business owner, and we have a lot of business owners at Cape Cod 5 that use consumer online banking, that is not the best alternative. We try to move them over as much as possible. We just can't move them in a mass. And we're doing a lot of work related to this. What I would do, whoever you bank with, what I would do is make sure you're on the business banking system. There really, in this day and age, shouldn't be a fee for that. But what I would do, and typically what there is a fee for, is to be on the ACH network. What I would suggest is the most efficient and ubiquitous network that's out there is the ACH network. So you can actually originate ACH payments through your online banking. And we have controls in place. All banks should have controls in place to mitigate fraud. The other kind of thing you can do that's kind of a workaround ACH, again, I would still be on the business online banking system because it gives you so much more functionality. I use it for a couple nonprofits I'm the treasurer of. I use our online banking system, and I find it to be very helpful. And the reason I say that is it's much more functional from a business perspective than being on consumer. But the other thing is the bill pay network system. You can actually, our bill pay network, I think many of them originate via the ACH network. So if you pay vendors, for instance, or others, you can actually kind of use the ACH network that way. The problem with bill pay is that if the end recipient isn't on the bill pay network where it's going to go via ACH, that payment's going to be set by a check. So you need to be really careful about that because it can take a few days for that check. It has to be rendered and then it has to be mailed and go through all those motions. In terms of nonprofits, the advice, again, we offer a lot of, and this is, I know, an advertisement for Cape Cod 5, but there are things you can take advantage of with different banks, including ours, no-cost business online banking. If you're a nonprofit, we see all too often where, it's Bob, Sally, and Joe that deal with the bank accounts. They're on the consumer platform and they're all sharing a username and password. Bad, bad, bad. Fraud, potential fraud, potential fraud, potential fraud. Get on business online banking because we can give you, and banks can give you different credentials. So Bob, Sue, and Joe can each log in with their own credentials and we know what each one did. You know what each one did when you're going in. Also, you can get access to the ACH network and more functional bill pay, more functionality within the bill pay network. The other thing that I would say about ACH, especially versus card, is that you want to try to get your donors to pay you via ACH. You want something on your website where you can take those ACH payments. Because what happens with cards, much more expensive, and also cards expire. So when the Smiths are paying me, I'm a nonprofit, via their card, they pay me every month. That card expires in October. Now I have to get to them and get that new card information, probably a CVV code as well as an expiration date. The number will probably stay the same. I can't get them, or, you know, we've been thinking about this. Things are tight right now. We need to take a break for a while. We can't continue to give to you. With ACH, unless that customer changes their bank account information, so whether it's at the same bank, so their account changed, or they went to another bank, so their routing number and account number will change, that ACH payment is going to go on perpetuity. So you don't really have a reason to rock the boat in terms of like with cards. So I would strongly encourage, for both those reasons, nonprofits to try to get as many of your givers, donors, onto the ACH network as possible. And you don't even have to have that set up so that it's you have something on your website. A bank can set that up for you where you're able to get your donors information, account information, and you're able to do the automatic debit just like a gym does every single month. So.
Chris, thank you so much. I know there's some more questions, but we do need to run.
Yeah, I know.
I would suggest if anybody has questions for Chris, send me an email, bert@cctechcouncil.org. I'll pass them on to Chris, and I'm sure Chris will get some answers out to you.
And I'm being involved with several different nonprofits. I have a passion for it, so happy to answer any questions, you know, how we or your financial institution may be able to help you as a nonprofit and different. NACHA, actually, my last thing I'll get in there, and I can share this, it's not easy to find their website. NACHA does have a whole kit for nonprofits, as well as different types of nonprofits like churches, religious organizations, on how best to use the ACH network. So happy to share that with you as well. It's really been a pleasure. Thank you so much,
Chris,
to everybody. And
we very much appreciate it.
Enjoyed it. Thank you.
Great.
Take care.
Thank you.
Thank you. Bye.
Thank you, everybody. We'll see you, some of you, in a minute at the annual meeting. So see you soon.
Thank you.
Take care. Bye-bye.
Bye-bye.